Hey there, everyone! Welcome back to the channel. Today, we're diving into a recent report from CIBC that's got everyone talking about the future of the Canadian economy and, more specifically, the financial relief that consumers might experience by 2027. Now, I know what you're thinking, another economic forecast? But hear me out because this one's got some interesting insights and a few surprises. So let's break it down. First off, the report highlights a transition year in 2026 with a glimmer of hope on the horizon for consumers. CIBC senior economist Catherine Judge suggests that the current constraints on consumers, such as high inflation and spiking gas prices, are expected to fade in 2027. This is a significant point because it implies that the worst of the financial pressures might be behind us. One of the key areas of focus is mortgage rates. The report mentions that the mortgage rate renewals, which saw many homeowners lock in higher rates, are peaking. By 2027, we can expect a more stable interest rate environment, even if rates go up a bit. This is a huge relief for those who've been struggling with the post-pandemic mortgage renewals. The squeeze from these higher rates is expected to fade, giving consumers more breathing room. Now, let's talk about gas prices. While they remain elevated due to uncertainty in the Middle East, CIBC predicts that the impact on lower-income Canadians might be less severe in 2027. The federal government's income support measures, like the Canada Groceries and Essentials Benefit, are providing a much-needed offset. If gasoline prices ease, it will free up more spending power for consumers. But here's where it gets interesting. The report also touches on trade negotiations with the U.S. If these negotiations go well, and there are no further tariff escalations, it could lead to a sense of stability and certainty in the economy. This, in turn, could empower businesses and investment, potentially leading to more hiring. A more stable job market would give consumers the confidence to spend more on non-essentials. Now, I think what's really fascinating is the idea that consumers might start feeling financial relief by 2027. It's not just about the numbers. It's about the psychological impact. The report suggests that as the financial pressures ease, consumers will feel more empowered to spend on leisure and entertainment. This could lead to a boost in the economy and a sense of normalcy for many families. However, it's important to note that there are still some uncertainties. The Bank of Canada has warned about the risk of higher oil prices spilling over to other goods and services. But CIBC's report seems to suggest that the tightest restraints from high gasoline prices might have passed. It's a cautious optimism that resonates with me. In my opinion, this report highlights the importance of a balanced approach to economic policies. While there are positive signs, we must remain vigilant and address the underlying issues. The report's focus on trade negotiations and income support measures is a step in the right direction. It's a reminder that economic relief can come from multiple fronts. So, what do you think? Are you feeling more optimistic about the future of the Canadian economy? Let me know in the comments. Don't forget to like and subscribe for more insightful content. Thanks for watching, and I'll see you next time.